This is the Rodney Bull Show, bringing you truth about money they never taught you. Now, here's your host, the man himself, Rodney Bull.
G'day, legends. What's cracking, money stackers? Welcome back to the Rodney Bull Show. Today's guest, someone who's built a very different path to wealth, not by chasing deals, but by funding them. Harley Green started out as a computer engineer before moving into real estate, flipping houses and running the burr strategies, it's hard to say, before eventually shifting into private lending, where he now helps investors put their money to work in short-term real estate-backed loans. Through his company InvestorWay, Harley helps create what he calls win-win-win deals, and that's my kind of deal, where operators get projects funded, housing supplies get improved, and investors generate strong secured returns. What I like about Harley is this, folks. He understands how capital actually moves, not just in theory, but in the real world. From using things like HELOCs and creative funding strategies to stepping away from flipping and more focusing on leveraging capital instead of time. He's built a model around income, leverage, and freedom, and he doesn't just talk about it. He lives it, running multiple businesses remotely while traveling the world with his family, which is bloody fantastic if you ask me. So if you want to understand how to move from working for money to having your money working for you without needing to swing the hammer yourself, working up a sweat, this one's for you, folks. So let's get into it, eh? Harley Green, welcome to the show, mate.
Thank you, Rodney. It's a pleasure to be here.
It's a real pleasure to have you on too, mate. I've been looking forward to having a yarn with you. And we were just having a bit of a chat before we started recording the show. So it was good to get to know each other a little bit and what's going on in each other's lives. And you reckon you're coming down to Australia sometime soon?
Yeah, we're excited to be visiting Melbourne at the end of the week.
It's awesome, mate. All a good time of year to come too. Melbourne's an interesting place. I was down there myself two and a half years ago, so for a bit of a visit. And she's 4 seasons in one day. It can be down there. So you want to pack a coat and a raincoat and a set of swimmers.
Yeah, for sure. We've been in Vietnam for 4 months, so it's all been like hot, muggy weather, and we're having to dig out, the coats and jackets and all that kind of stuff for our visit down there.
Awesome, mate. Awesome. Well, Harley, we'll get into it, eh? Just if you can, mate, give us a bit of a brief history, mate, and rundown for my audience, so that listeners can understand where you're coming from, mate, to get to where you got to today.
Yeah, well, like many people, I started out the traditional career path. I was a computer engineer for 15 years, had a great job, and, good benefits, and typical life of investing in the stocks, 401k, retirement accounts, all the stuff that like traditional finance teaches you to do. One day, my wife and I realized that we were very heavily invested in the market, and swings in the market could greatly, dramatically impact our financial well-being, and it was something that we had no control over. And so that's when I started investing in real estate. And like many of the guests you've had on your show, they've talked about the benefits of real estate, how it's great for building net worth. But it also comes with some challenges. And, we saw those challenges firsthand. We saw the benefits. We had great acceleration of our net worth through leverage and buying real estate. But we also had setbacks where it was taking a lot of time, dealing with tenant problems, house maintenance, cash flow was not there. And so that was something where when we wanted to really have the true financial freedom that our net worth from the real estate should have allowed us to have, we realized we needed to do something a little bit different. And we found private lending. And the benefits of private lending is it solves a lot of the challenges with just direct real estate ownership, in that it gives you solid cash flow that is still secured by real estate. And it's not subject to the ups and downs of the stock market, where you've got to time and be careful about when you make your withdrawals to avoid locking in major losses. With the private lending, we're able to do short-term fix and flip loans for investors, meeting a need where traditional financing doesn't play. So we're in a unique market where private lenders are the only ones in this space. The big banks don't play here. And we solve a unique challenge for local communities where builders are no longer making starter homes. At least in the US, it's not profitable for them. So they're really focusing more on like mid and upper luxury homes where they make more profit. And so first-time home buyers are in this like crunch where there's not new homes being generated for them. And so the only things that are available for them to buy are existing homes. But many of the existing homes are getting older. They're having more maintenance issues. There's things that need to be repaired. And a lot of first-time home buyers don't have the capital to make those repairs. And maybe the people that are have been living in these smaller homes for a long time don't have the capital either. And so this is where we step in with our real estate investing partners. They go in, they find these homes, they make those improvements, they do the flips, and they create new housing stock out of these older homes that maybe aren't even livable right now. And so we're solving that housing problem. We're giving jobs being created for all the tradespeople that are making the work for our flippers, making strong incomes for the real estate investors doing the flips. And then on the backside, we're doing the private lending, and we partner with other people who want to invest in a secured, high yield investment that's short term, so they don't have their capital locked up for a long time, getting strong returns in like the 12 to 14% range. So, in a nutshell, we're now really focused on private lending and helping other people get into private lending. And it's allowed us to have this lifestyle where we're able to travel internationally full time with our kids and not have to worry about like being in one physical place and knowing that our money is working as hard as we are.
That's bloody awesome, mate. That's bloody awesome. Yeah, I'd imagine it's probably the same in a lot of countries, but it's definitely the same here in Australia as the issues you're having in the States. Yeah, big housing crisis, mate. Lots of immigration, and had a housing crisis before we had big influx of immigration like we've had in the last, 5 years. And town for instance that I live in, it's an old town with a lot of old homes in it. Same thing here. A lot of people struggling to find rentals, and there's actually a lot of old homes that are empty in our town, sadly, that could have people living in them, and they're just not. They're just sitting there empty, and they're old homes. Some of them are really old homes because it's an old mining town with a lot of history. So
Right.
it's something that I look at all the time and go, geez, it'd be wonderful to be able to try and get these homes, you know, fixed back up and back on the market and available to people, whether it's for people to buy as a first home or renters, So yeah, what you're doing, mate, I tip my hat to you, and it's really, 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 really good. It needs to be
Thank
done,
you.
A lot of people out there today for sure. Market's a tough place, eh? Um, could you just give us a bit of a rundown on what a Burr strategy is?
Absolutely. So when we got into real estate, the Burr strategy was something that really helped boost our net worth. We were able to go and purchase a house that needed some work, like the ones you're describing. We'll get, partner with a private lender like ourselves to help with the purchase and cover the renovation costs. We get in there, we work with the contractor, do some of the work ourselves to push appreciation and force appreciation by making repairs and improvements to the property. And now you've got a beautiful, livable home. You can then go and get a tenant in there. So the B is the buy, the first R is you renovate, and then the next R is you rent it out. So now you've got the tenant in there. Once you've rented it out, you can refinance it because you've got a lease, you've got income on it. So then you can go to the traditional financing banks or other like direct debt service coverage ratio loans that are kind of a hybrid of like private and the larger industry banks and get a long-term stabilized loan on it. And basically, the ideal is that that new loan is going to get an appraisal on your property, and they're going to see that you've added a lot of value to it. And oftentimes, you add more value than you actually had as expenses. And so then the value of the house is more than what your costs were, and they're able to actually cash you out. And so the new loan is bigger than your old loan was, and you're able to get a check for the difference. And so there's a lot of times where you're able to basically recycle your capital that you use for purchasing these homes over and over again. Every time you do that refinance, you get that money back out if the numbers work. Now that's the trick there is if the numbers work. A lot of the challenge with real estate investing is like you got to find a deal where everything pencils out. And so that's something that we've really enjoyed about private lending is that we don't have to be hunting for deals where the numbers pencil out. The borrowers come to us because we have got the terms that make sense for flippers. And so there's no more hunting for deals.
Okay, so the deals are coming to you as such.
Exactly.
Yeah. Wow, that's awesome, mate. Thanks for explaining that for the listeners. Really appreciate it. Um, for people who have never heard of it before, mate, what is private lending in simple terms, and where does it sit between banks and hard money lenders?
Absolutely. So most banks are slow. They require a lot of paperwork. Anyone who's gone and got like a primary residence mortgage knows this. Like you've
Yeah,
got that
pain.
appraisal, you've got to do the credit report, you fill out multiple page applications, send in all your bank statements, mortgage statements if you own other homes, and they're slow on the back end. That does not work when you're getting involved in flipping houses because oftentimes the deals come to you where the sellers are in distressed situations, time is of the essence. And if you want to get that top dollar, you're oftentimes competing against other people who might be paying all cash offers. So you need a financial partner who can close the deal quickly. And so that's where hard money and private lending come in. They're more agile and nimble. They're able to like look at deals, underwrite them, and get funding fast. The difference between hard money lenders and private money lenders is more nuanced. It's not well defined. I like to look at it as hard money lenders. A lot of them are larger institutional money, but are not like the big government-backed lending organizations. They still have a lot of requirements. They can move a little bit faster than the big government organizations for lending. However, some of them can be a little bit predatory. There are some models in hard money lending businesses that actually try to get borrowers in bad loans and then take over the house. And I don't like that. I want to create a win-win-win situation for everybody. And so private money lending is a little bit different, where we're dealing with mom and pop investors who come together and pool their funds to lend on specific properties. And we're able to make decisions locally. We're able to make the deal structure for the loan work for the borrowers. And we're able to have that relationship with borrowers. So we understand like when you're doing renovations on a house, challenges happen all the time. And so we have in our loan structure built in extension options to give borrowers that time pressure relief. If say like, midway through, they discovered another problem that they couldn't see when they were doing the walkthrough and it needs another month of work on it, or they need another 10K to finish up a project, we can come in and say, all right, let's review the deal. Let's see if it makes sense. Does the final value support this? If yes, we can make it happen. We can make that extension. We can add some more funds to the loan, and we can make it so the borrower exits successfully and makes a lot of money. And the great thing about that is then they keep coming back. And so it feeds into our deal flow. So we're not having to worry about going out and like advertising and saying, hey, we've got this great system, come borrow from us. The borrowers just keep coming back and telling their friends.
Yeah, that's awesome, mate. That's really, really cool. Really cool. Good. Nice breakdown, mate, too. Appreciate that. So, why would someone choose this over traditional investing, and what actually needs this type of funding, mate? And how do people, I guess, find you and come to you as such, and you make deals with them?
Yeah, so I'll start with the first part, which is like, why would someone want to use like private money lending? And the reason for that is because, again, we kind of talked about in the last question, which is the traditional banks and the hard money lenders sometimes don't make the timeline or the deal structure work for a deal. And so private money comes in that middle ground where we're able to charge higher interest rates. So like a lot of times people look at it and be like, how did you charge that borrower 15, 16%? Why would anybody pay that? Well, the answer is because we can turn around and fund a deal in like 3 days. We make it really easy for them to get the money. We have an all online tech forward application that's super fast. We don't check the borrower's credit. And that's something where a lot of people are like, oh, why you don't check their credit? The reason for that is because we underwrite the deal. We secure our capital based on the house itself. And so we're looking at the deal. Does the deal make sense? Is there value in the property? And what is the property value going to be after the renovations are done? And if those numbers pencil out for us, we fund it. Versus a lot of other times people are like, oh, well, you didn't pay in the past. I don't really worry about if someone like had debt or other issues in the past because our money is secured by the house. So if they don't pay or they walk away, I can just take the house, I can finish the flip with my contractors and sell it, and I'll probably make more than the 15% I'm charging on the loan. The other security that we put in place is the down payment. So the borrower's got skin in the game. When they're new, they got to put a larger down payment in. As they demonstrate experience with us, we can lessen that requirement so they have less skin in the game because we have that relationship. We know they can execute. So when the borrower side, it's pretty easy because once you do a few deals, all the investors talk, they tell their friends, and like you got to come work with Investaway, like they give the best loan products. On the investor side, so people looking to deploy capital, maybe they've got money in the stock market. Here's the thing: the stock market is like up and down all the time. You're stressed. It takes a lot of focus to be a diligent stock investor and like ignore all the noise and make those returns work. And the fact of the matter is, like historically, it's averaged about 10% annual returns. Some years better, some years worse. And that can be difficult for people who are not experts in like stock market investing, especially if like this is their retirement savings and they're getting near retirement or they want to have financial freedom and like live off money from the stock market.
Yeah.
It can be really stressing because if it's a down market and you're like, well, I need to pull money to like buy groceries or, make my rent or mortgage payment, you're locking in losses when you do that.
Yeah.
Versus with private money lending, when you invest in the loan, you're getting cash flow on a regular basis that you can use for whatever you want and at a higher average return than the stock market has traditionally done. Our investors that partner with us on loans have seen a 15% annualized return. And that's across the board. And the reason for that is because they're getting compounding returns because most of them just keep rolling their returns into the next loan and they're short-term loans. So you get compounding interest. And then the other reason is a lot of times the loans will extend a few months because of the issues we talked about before, that all the things that come up with flipping.
Yep.
When
Yeah.
those loans extend, it actually is a good thing for us as the investor, the lender side, because the borrowers pay additional fees for that. Typically, it's like 1% of the total loan, which means, and we pass that on to our investors in the loan. So they're able to get a 1% capital boost to their original investment that then continues to earn that interest on top of it. So it's just a huge compounding effect. And then the other thing that we make really easy for people who want to invest in loans rather than stocks is they don't have to invest the full amount of the loan. With Investaway, what we do is we put our money where our mouth is. So we underwrite and we fund all the deals up front with our own personal capital. After it's been funded and it's active servicing and good standing, we put it up in an online portal where our investors can go. They can browse all the different deals. They can see what the interest rates are. They can see the deal, where it's located, who the operator is, all the kind of stuff they would want to do for like their due diligence. And then they just click, hey, I want to put 100K on this one, 50K on this one, whatever it is. And the great thing is then you can create what I call a loan ladder. So a lot of times in like financial circles, people talk about making like CD ladders or treasury ladders where
Yep.
they're investing in like a really secure kind of low yield asset and they put in a little bit every month. And then at the end, they get back a little bit every month. So they are creating cash flow. You can do the exact same thing with lending with Investaway that you cannot do if you were like to do it all yourself. You'd have to fund everything for each loan and wait all the way to the maturity to get your capital back. With Investaway, you can come and say, all right, this loan's set to mature in 2 months, so I'm going to put 50K there. This loan is set to mature in 4 months, I'll put another 50K there. So then as those pay off, you're creating a steady cash flow for your family and your business.
Nice.
And these don't go down because it's secured by real estate.
Yep. Awesome. So obviously they're quite short-term loans that you're talking about, Harley. And is that because along the lines of it's people who are looking to buy a property specifically to flip, to do renos on it and then flip it?
That's exactly right. So we only do like short-term fix and flip or some bridge loans. These are not like long-term rentals or primary residence loans. These are specifically for investors who just want to get in quick, make renovations, make improvements, and then get out, whether it's like the BRRRR strategy, renting it and refinancing it, or just flipping it and selling it on the market.
Yeah. So they're quite fast, be anywhere from 2 to 3 months, maybe 4, 6 months outside.
Yeah, so our typical loan term is 4 to 9 months. We do offer 1 to 3 month extensions. However, we do have many borrowers that finish deals in like 2, 3 months. And so, they'll get the 4 month term, but they're done in 3 months. And especially if they're doing the BRRRR strategy, a lot of them will have like a renter lined up. They'll identify a house. They'll have a network of like tenants that are like looking for housing. And they'll say, hey, if I fix this house up, will you rent it from me for whatever, $1,200 a month? They'll say yes. So they'll come in. They'll do the renovations super fast because they've got a crew, they've got a system in place. And as soon as like that last nail is in and the house is ready for someone to live in it, they get the renter in there, they get the signed lease, and they go to another bank to get the long-term loan. And so that typically takes like 30 days. And so, if they finish renovations in 1.5 months and then another 30 days at 2.5 months, our loan is entirely paid off. We collect our capital, interest. And so what we'll do is anyone who's invested on a loan with us, as soon as we get notice that like, hey, the borrower is about to pay it off. They request a payoff statement. Typically, it's like 2 weeks out from when it's planned to pay off. We'll reach out to all the investors on the loan and say, hey, here's what your estimated proceeds are going to be. What would you like to do with this? Here's another loan that's similar to the one you were in. We can just roll it over to that. You're also welcome to look at our portal to choose anything else you would like. And so we have some that are like wanting just to have cash flow to live off of. And they'll say, hey, just send me the interest back, put all the capital into the next loan. And so the nice thing about our system is we make it really easy to have zero downtime in the capital. You don't have to like get all your money back, and then you got to go hunt for another deal while your money is just sitting there earning nothing. We pre-coordinate it. So the moment that money hits our account from being paid off on the first loan, we just immediately mark it active in the next loan, and it's earning interest for the investor from day one.
Yeah, hell of a system, Harley. Really nice, really nicely set up, mate. In regards to that, do you have like a minimum amount that people could get into? Because obviously some people are going to be better off than other people, but do you have a cutoff limit, mate, as a minimum that people are allowed to get into investing with you?
Yeah, so we ask for a 50,000 USD minimum per loan, and that just covers the overhead of our admin team getting all the paperwork set up and sharing all the documents. So what we do is once you have your investor account, you can go and browse, and then you just select the loan you want, indicate how much you want to invest. Our team sees that notification. They'll send you the documents to e-sign through the portal that is basically a joint venture agreement where we're assigning the interest of the loan that you're purchasing to that agreement. We manage it for you. So if anything ever goes wrong, we take care of that. And then all the proceeds from the loan, when it pays off, the interest and the capital go back to the investor. And again, like I said, we coordinate what they want to do at the end of that.
Awesome, mate. Really cool. Really cool. In regards to, I guess your company is based out of America and working primarily in America.
Yeah, so we're US based. We lend primarily in the Southeast. We like that area for a few reasons. We used to live there, so we have strong connections, both on like the borrower side and also on the side of if something ever were to go wrong. Now, granted, we've been lending since 2022. We've had zero defaults because we have conservative underwriting. We have a lot of protections in place, which I can get into. But the result is like we've never had any issue with loans getting paid off. But if something were to go wrong and we had to foreclose, we had to take over a property, we have all the contractor contacts, we have all the realtor contacts, the handymen, all those kind of resources where from anywhere in the world, I can just pick up a phone and say, hey, we just took over this house. My attorney's foreclosed on it. I need you to go and finish the flip for me. And then our team goes in, finishes the house, makes it look nice. We go ahead and sell it, and then we return the capital to the investors. So maybe there's a little bit more delay for the investors getting their capital back, but because it's a loan secured by the property, that house cannot be sold, it cannot be transferred without our loan being paid off first and us signing off on it. And so we are really secured. Even if the house burns down, we require all of our borrowers to have full hazard, and if it's in a flood zone, flood insurance. So we're the ones who are getting covered and paid if something happens like that. So there's a lot of protections in place versus like traditional stock investing. If you're doing individual stocks, there is a non-zero chance that it goes to zero. Like it is possible for a stock to
Yeah,
go to zero.
most
It is
definitely.
very unlikely, save for maybe like nuclear war, that a piece of real estate goes to
Let's hope
zero.
that don't happen, eh?
Right. And if that happens, you got a lot of other problems than worrying about your loan capital
Yeah,
investment.
I think that'll be the least of our worries, mate. Eh? We wouldn't be too stressed about loans then, by any means. No, that's really good, Harley. It was sort of a question I was going to lead into next, mate, in regards to what safety nets have you got in place for your investors, mate? Like because risk is key in investing. Full stop. Like that's
Yeah.
you want to preserve what capital you got first and foremost, more so than worrying about trying to grow your capital. Like that's
That's
key
exactly right. And
preservation
and that's one
factor.
of the big
So
reasons why we've pulled out of stock market investing is because there are so many downsides. There is no backstop to losing money in the stock market, which
yeah,
is funny because so many traditional systems are set up for people investing there for their life savings, which is just crazy to me.
yeah,
Versus with private lending, there's a whole slew of safety nets in place. So number one, on the deal side, we do very conservative underwriting. We have our background as real estate investors and flippers ourselves. So we're able to really understand the numbers and the details when someone brings us a deal and they say, hey, here's how much I'm purchasing it for. Here's the type of renovations I plan on doing. Here's how much I think it's going to cost. And here's how much I think the property is going to be worth when I'm done. We have the expertise to look at all those different facts and numbers and see what makes sense and see what doesn't. And oftentimes for newer investors or newer borrowers, I will work with them and say, hey, I really think you need to increase your budget for this line item, or you need to add a 5% just overall margin on your budget so that
yeah,
unforeseen things come up, you're not in a tight financial spot. And so those are the kind of things that we're able to do on the front end to really make sure the financing sets the borrower up for a successful exit. The second thing we do is look at the total loan to value ratio. This is really important in private lending.
yeah,
For us, we will only
sure.
lend up to a 75% loan to value ratio on the after renovated value. So that means after everything is said and done, what we think the house is going to be worth when it's all ready to sell or refinance, we will have a maximum loan of 75% of that value. So that means there's 25% of the value of the home as margin and cushion for us if something goes wrong, whether it's like slight market fluctuations or there's timeline delays. We've got a very substantial buffer there between where our capital is and the value to make sure that we're made whole. The next thing I kind of mentioned before was the down payments. So the borrower's got to have skin in the game. When they go buy the property, they're putting in a minimum of 5% of the purchase price. So like they've got financial interest in sticking with this deal. the cushion also helps with that too, because like they're looking at this, if they were to walk away, they're leaving 25% of the value of the property on the table. So in addition to their down payment that they've already spent, there's potential value that they'd be walking away from if there was an issue. So there's aligned interests there. Secondly, we have personal guarantees. So in addition to securing ourselves with the loan recorded with the county on the property, all of our borrowers sign a personal guarantee, which is basically saying like they pledge any personal assets they own to repay us in the event that the property cannot cover it. We have all of our loan documents drawn up by a professional attorney team that specializes in private lending. When we got started, that was something where we kind of skimped on. We didn't know what we didn't know. And we would just have like the title attorneys who were doing the transaction draw it up, and it was like a 3-page document. Now, our professional attorneys do it. It's like 130 pages. So it's a big difference, a lot more protections for us
Yeah.
in place. And the nice thing is that attorney team will handle the foreclosure. They'll handle the going after the enforcement of the personal guarantee if that ever was to become an issue. The other thing is we add a special clause called deed in lieu. And what this means is it's called deed in lieu of foreclosure, and the borrowers sign it at that purchase time in advance of any issues. And it basically is them saying, if we have to go into default and we have to foreclose, they have pre-agreed to just sign the deed over to us. So we don't have to go through a lengthy court process to get the deed. And that basically just is like another protection up front of them knowing like, hey, if something goes wrong and they don't pay, they've already legally obligated themselves to give us the property without having to go through court. So there's a huge amount of protections there that are just like, that's before one more that is like, I'll keep going on this one because it's just the protection is important, is lender title insurance. So when we close, we never just wire the money to the borrower. We always close at a title company where they're licensed professionals that do the title search, making sure that like the deed, the property is clear of any other encumbrance,
Yep.
that the new buyer has
Very
like clear
important.
title to it.
Very important.
And so in addition to giving the buyer insurance saying like, yes, the title company promises we did our job, they give us lender title insurance. So like if there was something where like, oh, the survey line was done wrong, or it's not as big as like the parcel records said it was, we've got insurance that will pay us the difference. And so we're covered, we have all those protections. That's just on day one when the borrower signs.
That's awesome, mate. That's awesome. And so hopefully that's listeners that are listening there at the moment, that puts your heart at ease a little bit if you're remotely interested in looking into doing this sort of stuff, whether it's with InvestorWay or anybody else in private lending. Like it's very important due diligence stuff that you need, information that you need to know about before you go and put your hard-earned capital out there. Risk is a
Absolutely.
big key factor. Harley, could you break down a bit of a real deal that you've done, mate, without getting, too personal? Because we, can't go into too much depth. But what was the deal? How was it structured? And what did investors actually earn out of the deal, mate?
Yes, this is the part I love talking about because this is where the rubber meets the road and we see the real life-changing difference of private lending. One thing that we do that I really like is working with borrowers who traditional financing and banks are not going to work with. And so one of my favorite stories is working with this guy who was in his early 20s when he first met me at an investor meetup, and he was drowning in personal debt. He just, had made some mistakes early on with credit cards and was in a tough spot and was
A lot
looking
of
for a
us,
way
a lot of us
to.
tend to do, through a lack of education. Because
That's right.
financial education is just not out there.
Yeah, you nailed it there. And so I was like, listen, I will be happy to work with you. I will kind of coach you and mentor you through your first flip. And I can also get you the financing if the deal makes sense. And so we worked together and he found a deal, like an off-market deal with a wholesaler. And he brought it to me. He's like, all right, here's the deal. And we just walked through, okay, let's look at the pictures. Like what do you think needs to happen to get it fixed up? We came up with a budget. And then he managed all the repairs, working with the general contractor to get everything done. And what we do is we do a draw-based reimbursement system. And so when they do work on the house and they can demonstrate expenses have been paid and the work is completed, they submit through our portal with all the photos and documentation, and then we reimburse them for that. So we're not paying in advance. We're only paying for a
Okay.
completed value that is now additional value on the house. So again, like the house is securing our investment. So one of the deals that, as far as numbers go, these are we're in the Southeast and the greater Tennessee area. So some of these homes are a little smaller than like people might be used to in like California or New York. So the
Okay.
numbers are a little bit smaller. He was able to get a house for 40,000 USD. So this is like very
Wow.
affordable in overall
That's,
in the US.
Yeah.
but no one could
You
live in it.
wish
I
you
mean,
could buy a
it
home
was
that
not
cheap here.
livable. This is a tear down house, right? As you can imagine. It needed about $35,000 worth of renovation, so nearly like the whole purchase price in renovation is the cost there. So I think the total loan was about 85,000 USD. And here's the great thing: after the work was done, it was about 3 months. The house appraised because he had a renter lined up, and then the had a full like third party professional appraisal done for the DSCR loan that was going to be his long term loan on it. Came in and it valued the house at $185,000. So nearly
So,
double the cost of what the purchase renovation was.
yep.
And so the beauty of that is with at least in the US, when you get the new loan and it's cashing you out, doing a refinance effectively, the money that is the difference between like the new value and what your costs were, you get a keep as a tax-free check because it's technically from debt. It's not like new income. So there's no taxes on it. So he was able to
Beautiful.
generate a $40,000 payday and not owe any taxes on it. And the debt service coverage, the cost of that money is totally paid for by the tenant paying rent.
Wow. That's that's what you wanted to be, eh? That's
Exactly. So it's a huge win for him. It's a huge win for that local community that had an eyesore that nobody could live in, turned into
yeah.
a beautiful new home with a family living in it. And then on the investor side, our investors, we had an investor partner on it. They put $50,000 in. It was a short-term loan, but the rate was high. So it was at like 15.5%. And so, they got all their capital and their interest back in just 2.5 months. So they didn't have a long lockup period and they earned an annualized rate of 15.5%. So I forget what the exact number on that would be for 2.5 months, but that was the
Yep.
annualized rate of return. And so the nice thing about that is you're not locked into like one investment forever. If you've got something that comes up, you want to, pay for your kids' tuition or something, that money is coming due like every few months. It's not like you're committed for 5 years. And the transaction costs for lending are zero on the lender side, the investor side, right? Versus like if
Okay.
you go out and you buy a house and you want to try to get your money out of it, you're either getting like a line of credit or you're getting a new loan or you're selling it, you're paying like 1 to 5%, maybe
Yeah.
more of your value just in fees. It's just gone. Versus when you're investing in lending, that 50K you put in, when the deal is done, you get your 50K and the interest back. There's no fees.
Yep. That's beautiful. That's really nice. Well worth looking into, eh? If you've got the capital to be able to start playing in that space, mate, for sure. Um, you get your business going up and running off of all your own capital to start with, Harley, and how did you kick that off, mate, and then find people to come in and bring more investment in for you?
Yeah, so we started slow. My wife had a real estate team. We saw situations where these deals were falling apart because of other lenders dropping the ball. And so we were able to step in with our own personal capital. I started out just lending with my retirement accounts. So one thing in the US with retirement accounts, when you leave a job or you have a individual IRA, you can roll those into what's called a self-directed IRA, where then you can invest into things outside of the stock market. It's really amazing. You can buy real estate, you can lend money with it. And so that's where we started. We started jumping in and lending to investors we knew to purchase and renovate homes with our retirement accounts. We kind of let that roll for a few years, just like kind of on the back burner. We just had a few borrowers who just kept coming back with deals and rolling one to the next. And then early last year, we were just kind of doing a full financial snapshot, looking at like what's going well, what's not going well with our personal finances. And we're like, wow, this is going really well over here. And we didn't even notice it because it doesn't take very much work.
Yeah.
How can we like 10x that? And so we actually ended up selling some of our rental properties that were underperforming. They were like in between tenants. The cash flow was not there. They had appreciated a lot. And there was just like all this value sitting there, not working hard for us. So we just sold it, paid the taxes on it, and it was worth it because we're able to get such high returns with the lending and have the cash flow that we need to be able to travel internationally. And so in 2025, we really scaled up. We put a lot of our own capital in from selling real estate. I took HELOCs on some of our other real estate properties that were performing well to get access to the equity sitting there since they'd appreciated. And then we started partnering with friends and family and other investors that wanted to lend as well, but maybe they didn't have 200, 300K to fund an entire loan on their own. They didn't have the underwriting skills that we do as investors with our background, but they just wanted to enjoy the benefits and the security and the returns of lending in a very passive way. And so we set up a technology portal using loan management software. It's professionally operated so people can easily log in at any time, like I said, and see the deals, see what they're invested in, track all their statements and things like that. So we just have made it a really easy experience for people to enjoy this amazing asset class. And a lot of people will then ask, all right, well, what's the catch? Like, how are you making money when someone invests with you if like there's no fees and they're getting these incredible returns? And the way it works is we originate the loans, and at origination, we charge the borrowers fees. So typically it's like 2 points, 2.5 points, and we collect those up front before we put the loan up on the portal for other people to invest in. So we've already used our personal capital. We've earned 2.5% on day one on it, and then we open it up for other people to come in and share the interest with us. And then we do take 2% of the note of the delta between the note's interest rate and what we deliver to investors for a service and management charge. So it's not like a fee we're taking out of what they're making. It's just the delta from what the borrower pays to what we pass on. And so it's still most of our notes are written at 14 to 16%. And so our investors make 12 to 14. And then, like I said, with compounding and extension fees, they've averaged 15% annually.
Awesome, mate. Thanks for breaking that down, Harley. That's really good. Nice and clear for people to understand there, mate. And you got to make money, mate. You know, that's what business is about, eh? You can't do it for
That's
charity
right.
because you cannot pour from an empty cup, mate.
That's for sure. And this way, everybody wins, where the borrower gets the money they need, the families get new houses, investors make good money that are secured, and we make a good living for our family as well.
Yeah, for sure, mate, for sure. Um, are you only open to investors from in America, mate, or are you open to investment globally, or how does that work?
Yeah, great question. So we actually have international investors. We found a way using Wise, which is like an
Yeah,
international money
yeah, I
transfer
know what it is,
tool.
mate. I've used it. Yeah,
Perfect. So a lot of people they can do is just create a Wise account for your local currency, and then you can just add a USD account so that you would transfer money into your local currency account from your local bank. Usually there's no or very minimal fees if you do just like an electronic transfer native to that direct bank account. And
yep.
then you can use Wise to convert it to USD. We have found they have the most efficient, lowest cost way to convert currency. So you're losing the least amount of money by doing that conversion your own, and then it's in a USD account. And you can use that to do what's called an ACH in the US. It's just a direct electronic money transfer to our account after you've signed the paperwork. And then as soon as it hits our account, you're earning interest on it. And when you want the money back, we send it right back to that USD account that you sent it from in Wise, and you can do whatever you want with it from there.
Okay, awesome. That's awesome, mate. Well, that gives access to more people and gives you more access within your business globally rather than just being within the US only.
Absolutely. And it's great for international people too that want international diversification, maybe exposure to the US dollar and exposure to US real estate. So it's a great opportunity for people outside the US as well.
Yeah, for sure, mate. That's really cool. Really cool. Um, what do you reckon? What are the biggest mistakes you see new investors make when they first get into private lending, mate? And where do people lose money? And what should they avoid at all costs in regards to doing this?
Yeah, a lot of times when people get into private lending, they will jump at opportunities that have really high yields, but they're not secured in first position. So there will be people who are looking for what's called gap funding or second position loans on property, and those are really dangerous. We made the
Okay.
mistake, and I'm speaking from personal experience because we made the
Yep.
mistake early on of being like, oh, like I trust this person, they're a friend of a friend, they've got what looks like a good deal. They're saying that our investment is secured by the real estate when in fact it's technically secured by the real estate, but it's behind another loan. And so, like in the title, there's tiers of priority for the debt. And so, whoever is there first, if the property sells, they get paid first. Or if it forecloses, they get paid first, their entire balance plus interest. And then after that, it's anyone in those subsequent positions that get paid. So, in the event, most of these deals, when people are looking for those second positions or gap funding, it's because there's not much margin on the deal. And then they're also trying to have no skin in the game. And so it creates a very risky situation. And we're still licking wounds. Like we still have deals open where we were like secured in second position and we've not been paid yet. And it's been years. And so, really, something to look out for is only lend if the investment is secured in first position.
So I gather from them valuable hard lessons that you've learned, mate, that you've moved away from that style and you do a deeper depth of due diligence in regards to making sure that you're in first place as opposed to second place with your investing now.
Absolutely. We only do first position loans. And what we'll do when some people come to us that are like really big in kind of creative financing space, people may have heard of like Pace Morby and going out and trying to get like subject to properties or seller finance properties. We'll say, fine, we can support that as long as we're in first position. So if they can negotiate with the seller for seller financing to put that seller's note in second position, then we can fund the deal, get you the money, the need to purchase the difference and the renovations, because a lot of times the sellers aren't covering renovation costs. And so that's how we'll recommend people structure the hard money loan or the private money loan if they're going to be dealing with seller financing. It's just put the seller in second position. They're the ones who are probably most likely to be okay with that. Whereas like the seasoned private lenders like us are like, no, 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 first position only.
Sure, mate, for sure. And I guess, that's just life, isn't it? And this is how we best learn, mate, by mistakes. It hurts a bit more when you learn by your own mistakes, but it's a bit easier if you can learn from other people. So I appreciate your honesty there, mate. I've
Yeah.
been there and made some financial mistakes in life myself too, and they hurt. But this is how we learn best by far,
That's exactly right.
for sure. Um, On the you talk about loans being asset backed, mate. What does that actually mean, and how does it protect investors if something actually goes wrong?
Yeah, so we kind of talked about that, the lines of protection. So asset-backed means that it is secured by real estate, the hard, tangible asset of real estate, which people, love the benefits of real estate investing because it's a hard, tangible asset. It's generally appreciating over time. It's got raw land, like we said, like very unlikely that it goes to zero. And so with lending, when we lend, we only lend through the title companies where we record our investment, the loan, through a deed of trust and a note that get recorded with the local government in their record saying Investaway and their lending partners are owed this much money on this property. Nothing can happen to this property until they get paid back. And so then what typically happens when a loan gets paid off is the title company handling that new transaction. After they've wired us the funds, they send us what's called a deed of release. We fill it out and say, yes, we have been paid this much money. We sign and authorize and release the note. They then give that to the county, and the county can then clear that lien. So that's what it means to be secured by real estate or the tangible asset.
And I've been watching the markets and what's going on, the craziness in the world. Hard assets is something very important to be getting yourself into these days. I'm a strong advocate for things like gold and silver, and Bitcoin, mate, to speculate on, I guess, more than anything, because it has some really good properties about it, and real estate by far. Like they're not making any more of it other than rebuilding it. They're not making any more of the land anyway that I know of. So hard assets side of it is vitally important and gives you really good peace of mind and sense of security.
Yeah, we love it because, like you said, you're in that hard asset, you're in the real estate class of investments, but you don't have any of the downsides. You don't have maintenance costs. You don't have property tax. You don't have tenant phone calls. You don't have leaky roofs. You just have a piece of paper that says someone else is going to pay you money in a few months and it pays off.
Awesome, awesome. Um, you've seen a lot of investors move away from flipping or owning rentals into lending. Why is that shift happening, Harley?
Yeah, so it's kind of funny. There's this like natural progression that we've seen over and over in the real estate investing community and the private lending community. People get started, everyone hears about flipping homes, doing the BRRRR strategy, and then they get a nice sizable portfolio. Maybe they've got like 10 houses, they're making a couple $100 each, and they realize this is not enough to actually quit my day job. Like I've got, a couple million net worth, but I have not enough passive income to walk away from my job and actually live a comfortable lifestyle. And so that's when they transition to private lending because then they can go and borrow against the real estate. So they don't necessarily have to sell it. They just go put a home equity line of credit on it. They can borrow against that at a lower interest rate than what they make with lending because the bank is, again, like the traditional banks, they give a lower rate because it's secured by the property. And then they can go and do interest rate arbitrage and take that capital and turn around and lend it out. So if they're paying 9% to the bank and they turn and invest it with us and they're making 15%, you can do that infinitely and make a ton of money. And so like we've done
Awesome.
that personally. We borrow against like our whole life insurance policies. We borrow against the equity in our property. And then anyone that wants to give us money will say like, sure, we'll borrow money from you because I know I can turn around and have a secure investment that's paying a higher rate. And so the more money that we can bring in, even if we're paying, and that's why we allow investors to come in and allow investors to earn such high returns because we've got that margin on it. So it's like if I can bring another $1 million, I can make 2% on that just on interest spread. I will do that all day long. And again, it's a win-win-win situation.
Yeah, awesome, mate. Really, really cool. Nice breakdown. I'd just be curious to know how you said earlier on yourself, you have self-directed IRAs and stuff. We have similar same sort of thing here in Australia because, like, you have a 401k, and here in Australia, that our version of that is called superannuation. And then we can also do what's called self-managed super funds, which I guess is very similar to what you're talking about the self-directed IRAs. Do you have any Australian investors that are invested or have invested with you, mate, so that in regards to my audience, predominantly being an Australian-based audience, that's something that they could look at doing? I myself has a self-managed super fund, and I'd be definitely very interested and curious to see whether or not it's something that could get into with that when with your business.
Yeah, I would love to look into that. So that's something I need to research a little bit more to see what the custodians and those funds are structured and what assets they allow people to invest in. We do not have experience right now with people using those to invest with Investaway. The foreign people that have invested with so far has just been personal capital, whether like they sold a house and they had the liquid cash. So I would definitely look into that. That's something that if they allow people to invest in notes or joint ventures or partnerships, then more than likely it would be something they could partner with Investaway on and be a private lender with us. On the US side, self-directed IRAs, totally fine. That's where we got started. Most of our investors are doing it through self-directed IRAs. All of our paperwork is like set up and fully approved for all the self-directed IRA custodians.
Okay, cool. Yeah, no, I was curious because I know here in Australia with our self-managed super funds, you can invest into property yourself, like you can go and buy investment properties and things like that. So I'd be curious to see whether or not you step out and branch into that private investing space that you're in, mate. Like, yes, I'm sure a lot of other people are too. Yeah. Because yeah, like we are looking to do that with our own. So that's definitely something that I'd like to learn about myself.
Yeah, well, we can talk after and try to get it set up for you too.
Yeah, mate. Yeah, just interested, and for the listeners to be able to be hearing that question because they probably hopefully they'd be thinking about that themselves. The possibility is another way to be able to, because the key is to get our money working for us, and so we don't have to be working for our money, mate. We
Exactly.
can go and ultimately, get to ultimate financial freedom, which is all about getting your time freedom back in your life, eh? Which is our most precious commodity in this whole world and in this lifetime is our time and the way that you get to spend it rather than being stuck in the rat race and in a 9 to 5 and just dreaming and about doing things and never ever actually get to do it.
Yeah, for sure.
Very, very, very. What do you reckon for someone listening right now? Maybe they've got some savings, maybe a bit of super. How should they think about whether private lending is a good fit for them? And how much do they realistically need to start with? I know you said earlier on 50 grand's your minimum. So obviously that's the minimum target there. But
Yeah, so finance is such a personal topic, and everyone has different risk tolerances, different preferences for where they're investing. The biggest thing for me is I want people, if they're going to invest in something, to really understand it. And so after listening to this episode, I'm sure people have more questions that are unique to their situation. More than happy to have a call with them if they go to investaway.co/call, CALL. They can book a call with me, and I'm happy to go over any of like the available opportunities in our offering portal, go through all the deal specifics, answer any other questions they might have. Because the biggest thing is being comfortable. We do not want people investing in something and then like losing sleep at night, wondering if they made the right choice. And so being 100% comfortable with it, making sure it fits with your financial goals and that you have, this is like investment money. This is not your mortgage or rent money that you're putting into an investment because it is locked up for, like we said, 4 to 9 months.
yeah, awesome, mate. Awesome. We're starting to run up on time, Harley, and so we'll probably just run through one more quick one maybe with you, mate. Um, and we'll look at wrapping it up, I reckon. Talked about funding projects that improve housing supply, mate, which is a fantastic outcome that comes from this, I believe, from my understanding of it. Um, how does private lending actually make a difference in real communities, and have you been able to be personally been able to see that outcome come from that, mate? And how do you actually need to own property to build wealth in real estate, or is it just what most people have been told?
Yeah, great questions there. So the community impact is huge. So on the first side, we're helping our real estate flippers make a solid income for their family. So jobs are created for them, income is created for them. Underneath them are all the subcontractors, the tradespeople, the cleaners, the real estate agents, the title agents, this whole ecosystem of people involved in real estate transactions that are all being funded indirectly through that private lending, that the money that we give our borrower. And then the community, they're getting these homes that are transformed, um, solving the affordability crisis that we have in so many countries now with regards to housing. And the other thing too is with private lending, we're able to make decisions about who we fund that big banks oftentimes can't make. And for that reason, we're able to help people that might be locked out from traditional financing. So we had a woman come to us who had some credit issues. She was a really good real estate operator. She'd been wholesaling and she could demonstrate like she's really good at finding deals. She's really good at underwriting and really good at getting them sold. But she didn't
Okay.
have the money herself because of like medical health insurance issues and costs from that, medical debt. So she had a low credit score. So traditional hard money lenders and other banks would be like, nope, we're not lending to you. Your credit score is too low. She came to us and we're like, you know what? I don't really care what your credit score is. If you bring me a deal and the numbers are solid, we will lend on it. And so now she's actually been a repeat borrower. We've done 3 successful deals with her, and she's
That's
made
awesome.
tons of money on each one that she previously had no access to. So it's transformed her family's financial situation. It's created strong income for our investors, and and she does the BRRRR strategy. So she's providing great rental homes for people in her local community.
That's awesome, mate. That's a really solid outcome there, and a proper win-win-win. So yeah, that's really nice, mate. Really nice, and it's the sort of stuff that I like to hear about and like to see, and the sort of thing that more of that needs to be happening in communities all around the world. Our country desperately needs it big time. Because we're just so short on housing and affordable housing, whether it's rentals or whether it's first home buyers. Like what's happened in the financial space of the world. Like what what the banking system has done to us.
Yeah,
It's just my kids, your kids coming up, but I know for my young adult children now, like it's nigh impossible for them to be able to look at buying themselves a first time home,
for
that
sure.
shouldn't be the case, mate. It just should
No,
not be the case. And we
yep.
we need to do something about changing that, we really do. So sounds like this is definitely one way that people who do have the capital can help people who don't necessarily have the capital to be able to get in and get a good roof over their heads.
Absolutely.
Yeah, for sure, mate, for sure. So all right, Harley, love to thank you big time, mate, for your time today and breaking all that down for my audience. It's been a hell of a solid conversation. It's been a real pleasure to meet you. I'd like to definitely hope to have the opportunity to have you back on again someday in the future, mate, for sure. Be lovely to catch up with you now that you're coming to Australia, but you're going to be at the opposite end of the country to what I'm going to be at. So
Yep.
probably have to do it like this rather than be able to reach out and shake your hand, mate. But it'll be a real pleasure. Um, could you just do a bit of a plug for yourself, mate, and let people know where they could find you and reach out to you and look into what you've got to offer, mate.
Yeah, thank you so much, Rodney. It's been a pleasure being on your show. And like I said earlier, if people want to continue the conversation, they've got more questions about private lending, they can reach out through my website, investaway.co/call. It's a Calendly link there. You can book a time to have a video conference with me. Happy to walk through things. I'm also on LinkedIn. If you search for Harley Green, you can find me there. I post deals we've funded and the outcomes and the people involved, as well as on the investor side. I just posted a picture of email that our assistant sent out to one of our investors showing their returns on a loan that just funded.
Oh,
And it's
awesome.
really exciting seeing stuff like that go through.
Yeah, Cool, man. Cool. Really, really cool. And we'll be sure to put all your links in the bottom of the show notes, mate, for sure, so people can look into you and your business and what you've got to offer, mate. Because to me, it's a really good thing. It's a really, really good thing for sure. Awesome, Harley. Well, safe travels, mate. In your travels, moving around the world and coming to Australia. I hope you and your family have a fabulous time down in Melbourne, and I hope Australia turns the weather on for you, mate.
Thank you, Rodney.
Awesome, mate. Thanks, eh? On your legends, keep on stacking, folks.
This has been another episode of The Rodney Bull Show, a Rebel Edge production. Please share with your family and friends, and don't forget to like, subscribe, and leave a review.